Hey everyone, welcome back to Foundations of Personal Finance. I'm Pernille, and today we're going to talk about something super important, banking. Most people don't just carry around all their money around in cash. Instead, they keep it safe in a bank. Today, I'll show you how banks work, how to open an account, how to keep your money safe, and how to avoid common mistakes. Let's get started with understanding how to manage your money through a bank account. In this lesson, you will learn how to open and manage checking and savings accounts, understand the difference between debit cards and credit cards, recognize common banking fees and how to avoid them. And by the end of this, you'll know how to use a bank account like a pro. And as we're going through the lesson, keep in mind these key terms: debit, credit, overdraft fees, routing numbers, checking accounts, and saving accounts. By the end, you'll know how to use a bank account like a pro. Okay, let's start with a big question. Why do people use banks instead of just carrying around cash? Here are a few reasons. Banks keep your money safe. It's easier than just keeping them in your house under your mattress or something like that. You can easily access your money using a debit card, ATM, or banking app. You can earn interest on your savings because the bank will literally pay you to keep your money in their account. And it's easier to pay bills or get paid if you have a banking account. Imagine carrying around hundreds of thousands of dollars in your pocket. If you lose your wallet or you get stolen from, the cash is gone. But if your money is in the bank and your card gets lost, your credit card or your debit card, you can cancel it and protect your money. Okay, let's look at the types of bank accounts there are. There are two main types of accounts most people use. There's checking accounts, which are used for daily spending, like buying snacks, paying for movies, or getting gas. And it also comes with a debit card. You can write checks, use online bill pay, and withdraw money from ATMs. For example, you earn $20 for helping out with chores. You deposit it right into your checking accounts. Then, you buy lunch for $8 using your debit card, which is tied into your checking account. So that way, now you only have $12 left in your checking account. And then, there's savings accounts. And these are used to save money over time, like the name implies. These accounts earn interest, which means the bank actually pays you a little extra for choosing to store your money at their bank. A lot of these banks offer simple interest. So for example, if there's a 2% interest rate at your bank, if you were to put in $100 into the bank, every year you would earn $2, so you'd have $102 at the end of the year. And these are great for goals, like saving for a new phone or even a vacation. And let's take an example. You decide to save $5 from your allowance every week. You put it in your savings account and you are able to watch it grow month after month. Okay, let's learn a few of those key terms that we talked about at the beginning, which you'll hear when you're using a bank. Overdraft fees. This happens when you try to spend more money than you have in your account. Without overdraft protection, which is a feature some accounts have, your transaction might get declined, and the bank could charge a fee. For example, you have $10 in your account, but try to buy something for $15. That's a $5 overdraft. Next is direct deposit. So this is like when money like your paycheck or allowance is sent straight into your bank account. There's no need to go to the bank and deposit a check. It just shows up automatically. For example, if you work part-time, your employer can send your earnings directly to your checking account every 2 weeks. And next, there's routing numbers. This is a special number that identifies your bank. You'll see it on checks or when setting up a direct deposit. Think of it like the bank's address so money knows where to go. For example, if your employer is paying you money, they have to be able to know where to send it, and they send it to that account number so that money is deposited in your account. And these terms are very important when you're managing your money. Next, let's talk about debit cards versus credit cards. Like mentioned earlier, debit cards are connected to your checking account. And when you buy something, the money comes out right away. And it's amazing for learning how to manage your money because you're actually getting that money cut out of your account instantaneously. For example, if you have $30 in your checking account and spend $10 at Target, you'll have $20 left. And next is a credit card. With a credit card, it works a little bit different because it's not coming out directly out of your account. You're actually borrowing money from the bank. You must pay it back that money later, usually with interest if you don't pay it in full on the due date. And this is not recommended for kids at all or new savers because they aren't that responsible with their money. For example, if you spend $50 with a credit card, if you don't pay it off in time, the bank may charge you extra money or interest. So instead of owing $50 on, say, the 30th of the month, you might have to pay $55 on the 3rd of the next month. Debit cards are great for spending what you have. Credit cards can be incredibly useful when used wisely, but you have to be really careful because they can dig a deeper financial hole for you. And next, let's look at key common banking features. Modern bank accounts come with a lot of helpful features. For example, there's ATM access, which allows you to get cash when you need it from basically anywhere. Then there are mobile apps, which check your balance, deposit checks, and transfer money with your phone. And there's also overdraft protection. The bank may let you overspend a little without declining your card, but they may charge an extra fee for it. And finally, like I said earlier, there's direct deposit, which allows you to automatically receive money from a job or other income. These tools help you manage your account easily and safely. Next, let's look at bank safety and online banking security. Banks are some institutions that take security incredibly seriously, but you need to do your part too. When it comes to your PIN number, which is used at ATMs and with your debit card, keep it secret. This is like a password for your debit card and your bank account in general, and allow people to steal your money. So keep this incredibly secret and under wraps. Next is fraud protection. Banks will help you if someone tries to steal your money, but a lot of the times you have to enable this feature. So be sure to contact your bank and make sure this is enabled for your account. And finally, there's online safety. Only use banking apps on trusted devices, and don't share your login info or use your account on public computers, like at the library, for example. And check your account regularly. If you see any strange purchases on your account, tell your bank or parent right away. Better safe than sorry. Alright, now that you've learned all of that, let's try out some banking tasks with a fun activity. Step 1. Complete a mock check register. Record all of the money moving in and out of your checking account. For example, if you deposit $100, spend $20 on a game, and $10 on lunch, what's left? Next, fill out a sample deposit slip. Write your name, account number, and how much you're putting into the account. And finally, practice using a debit card. Imagine real-life situations, buying snacks, filling up gas, saving part of your money. Decide what you'll spend and what you'll save. Balance a check register after each step. This activity helps you feel confident managing a real account. Okay, now let's discuss. Let's talk about some big ideas. Why do people choose to use banks instead of cash? What could go wrong if you don't manage your account well? Would you rather use cash, a debit card, or a banking app, and why? And also, have you ever used a debit card or see someone use one? What did you notice? Talking about these key questions with a parent or an adult helps us understand the real value of managing money smartly. Alright, let's wrap up what we learned today. Checking accounts are for everyday spendings, while savings accounts help you build up money over time. Debit cards let you spend money you already have, while credit cards let you borrow, but you must pay that money back. Watch out for overdraft fees and unsafe practices. Banks offer helpful features like mobile apps, direct deposit, and fraud protection. Make sure that you use them wisely. Great job today. Next time, we'll learn how to make smart choices when managing your money, and how to separate needs versus wants. See you in lesson 5. Bye.